Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going through the income statement for 2018 for my very first real estate investment property. So we're going to be going through the income statement. I purchased a property in September 2018. We're going to go ahead and go over the numbers for October, November, December, and in January I got my first check. I started getting those in. I made a video going over my rental check either for January or February. Once my duplexes were all filled in, I made a video going over how much I was actually getting for all three of my properties. But in today's video, we're going to go over my first property, what the numbers were as far as the rehab cost and how I'm actually paying myself out of the gross income. Some of it goes towards the expenses, and then I take a portion of it for myself and just pay myself as a member distribution from my LLC to myself. So we're going to go through that in today's video. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. If you do enjoy the video, find it helpful, hit the thumbs up. And if you have any comments, questions, going over anything in today's video, drop it in the comment section below. I always appreciate all your guys' feedback as well as those thumbs up. And let's go ahead and get into it. I'm going to go ahead and flip the screen around here and begin sharing this. So we're not going to start off with the calculator. We will be going through the BiggerPockets calculator here with the Bird calculator with the numbers. But first, we're going to be taking a look at the income statements. So this is for the period range from January 2018 until December 2018. Now, I made a video in September or October somewhere where I had done a walkthrough of the property going over what I had wanted to do. You know, paint the walls, replace the flooring, had to get a new water heater, had to do some, painting. I believe I already mentioned that. But, fixing fixtures, fixing the bathroom, and all that was completed here. So during the month of October, I closed in September, I believe like the 21st, 23rd, somewhere in that range. So I had a 21 days to close, and made him a cash offer at $95,000, I believe is where I locked in. Came back with my repairs because when I did my walkthrough, I noticed that the carpet had patches that were just ripped up because the previous owner had a tenant that had a dog or a cat in there. They had tore that up. There were issues with the bathroom. The water heater was old, and when I had it checked, it was not working. So I put all these calculations, and I came back with my repairs. They dropped the price down to $90,000. So I said, okay, that's a little bit better than $95,000. So I went ahead and accepted it, made the buy. In October, I put $5,385 into it. And then November, the second month there, continued the rehab here, $3,695 in labor. Labor costs a lot. It's really not the materials, it's the labor that you are paying heavily for. When you guys go in there and they're working at $20 to $40 an hour, that can really start to stack up. So a lot of real estate investors who go into this, they're doing this all themselves. They're going in there, they're putting sweat equity into it by doing their own flooring, they're doing their own paint jobs, they're doing their own trim, pulling out the fixtures and such around the stuff, replacing the water heater, learning how to do electrical, learning how to do plumbing and all of that. They can save a lot there in maintenance, but again, it's not, you can't write off your time. So what is more important, can you make more than you'd actually be able to, if it's going to take you months to finish up a project, would you rather pay for it that you can recoup those costs, get the job finished quicker, get it rented out, and have it cash flow faster? Or, do you want to put time into it, take 3-6 months in order to get it fixed up? You may be saving on those maintenance costs, but it's costing you time as far as now you're paying for taxes, you're paying for utilities, you're paying for time away from your work, or you're putting in extra hours in a day to get all this done. And at the very end of the day, you're not having a tenant in it and there's no cash flow there. So you're just kind of, you got to pick and choose which one you want to go there. And then December, everything was basically wrapped up. By December, it was fixed up and it was already on the market, rented in December. December's fees were, I believe there was a water freeze. The water pipe froze. So we decided to make a box, put it on the pipes here in the backyard somewhere. There was a little pipe that stuck out that needed to be covered. And we also paid for some cleaning there in December and a few other miscellaneous things here that had to be fixed. So December was a very low month there, $753.32. For my total rehab from October till December, till I got that tenant in there in January, it cost $11,273.82. So that is how much I put into it, spending it on maintenance, spending on materials, spending on dumping fees, stock materials, equipment rentals to get this property having brand new flooring, have carpet. I'm sorry, it was vinyl composite tile. We painted all the walls. We put in new fixtures. We replaced the water heater. Pulled the wall out of the bathroom. Had to replace the whole tub there in the bathroom and trimmed the trees outside. Had to do some yard work. So there's a lot of stuff that went into it to kind of get this property up and into a nice rentable status. Now, jumping over to the actual calculator. Now, I purchased this for $90,000 after repair value. I estimated very low, $98,000. I thought it would have overshot a little bit higher. The appraisal came in a little bit lower. We went ahead and just kind of, I got a loan for, what was it? We'll go through here. So I put in that after repair value was going to be about $98,000, $105,000, I believe, somewhere in that range. So I just kind of kept that. Now, my purchasing closing costs were very low. I paid for this in cash, so purchasing costs were very low. My estimated repair cost, it was not an estimate. This is exactly how much I paid. I paid $11,273, so I just bumped it up $11,274. This is a complete cash purchase. It took me 3 months to, so estimated rehab time in months. That's actually 3 months of rehab time, and then I actually took 4 months to refinance. So once I got a tenant in place in January, I went to the, I work at a credit union, so I went downstairs and said, hey, I got this property. I have a tenant in place. I showed them the lease. We went over the paperwork. I locked in a rate, and I went ahead and refinanced it. So when I refinanced it, I took a loan of $69,000. Well, it was actually $73,500, but like a clown, this is something you do not want to do. You do not want to wrap your closing costs and lender fees into your loan. I did not do this correctly. You're supposed to pay all of this out of pocket. That way it's a deduction at the very end of the year. You pay off your closing costs out of your LLC account, your banking account, out of your lender, you pay your lender fees out of your own checking account on the spot when you're closing, and that way it's all deductible at the very end of the year versus getting wrapped up into your loan. If I had actually wrapped this into my loan, if I had not wrapped it into my loan, I would have got a check, a direct deposit into my bank account of $73,500, and I used that to go pay off the HELOC. But in this case, I would have had an extra $4,000 there to kind of do what I need to do, and it'd also be a deduction against my W-2 income. So my next refinance with my duplex, I am going to be making sure that I pay my closing costs, that I pay my lender fees out of my own business checking account. So this is not a interest-only account, and it includes it does not include PMI. I put 25%, so this is actually incorrect. So I don't have any property mortgage insurance, private mortgage insurance. I knew it was one of those. And it's amortized over 30 years. So the next step, I went over my income. So this specific single family unit rents out for $1,200. I do pay water, sewer, and trash. So the water bill actually comes out pretty low on this unit. This one, I believe my water bill for the first month was about $11. Second month was about $18. So I just estimate high. Some months you're going to be high, some months you're going to be low. I put in $30 for my water and sewer. Garbage, it's about $20 a month, $40 every 2 months or so. And so I put that in there as $20 a month. My monthly insurance, I got this from my quote, how much I'm paying per year divided by 12. That's $75 a month for this specific unit. So right there, my total monthly fixed expenses is about $174.42. Now, vacancy, where I bought this property, when I talked to my property manager, vacancies are basically 1% in this area, but I put in 5% just to be, I put it away 600 or 60 by 12 That is 600 and actually $720 right there, just getting stashed away for, extra mortgage payment for a month. It's going to basically cover a mortgage payment for in that year time frame. I put away 5% for repairs and maintenance, 5% for capital expenditures, management fees. I pay 10% to my property manager. So I put in the property management fees there. My income growth, that's actually a little bit probably high. We'll bump it down to 3%. The annual, how much do you expect your value of your property? I don't speculate here, so I just put in 2% with the inflation rate. 2% annual growth, 2% annual expense growth, sales expenses. If I was to sell this property off, I would account for 6% for realtor fees and 3% for closing costs being covered for a total of about 9% of the property sell price. Now, when I calculate these results based off all of what I had actually put into it, so during the initial rehab period here, let's see if I can zoom in just a bit here for all of you on those mobile devices. So purchase price $90,000, closing costs $386, estimated repairs. That is actually what I paid for my repairs prior to getting it rehabbed and rented out. My total project for this specific home was $101,000 going into it. My after repair value, I estimated it at $98,000. I probably could have got up to about $115,000, $120,000, but I would prefer to take a smaller loan here. I didn't need the cash out. I left some obviously into the home, about $20-some thousand, and that allowed me to have a very low mortgage, still be able to cash flow very nicely here after the refinance here, which we'll kind of take out. So during the initial rent period here without the loan, I had $1,200 coming in. My monthly expenses without a mortgage was $474.42. This was putting $60 away for vacancy, $60 for capital expenditures, $20 for garbage, $120 for management fees, repairs, $60 off to the side. I was covering water and sewer, putting that on my credit card. That is a deductible on my end. Plus, it gives me cash back for my business, builds up credit business as well. Plus, I included that in my monthly income. So normally, what this property would rent for is about $1,100 in the area. But because I included water, sewer, and trash, I said, hey, what do you think I could get extra for including these and the rent? And they said, you could probably bump it up by $100. So I did bump it up to $100. And that $100 is covering my water, my sewer, and my garbage. And sometimes I may go over, sometimes I may go under. For the most part, I believe I should get some of that, $100, and I'm only paying out $50 per month. So $50 over a few months will kind of help offset maybe some months where there's a leak here, a leak there. Hopefully there's not too many leaks. I'll have those checked out right on the spot because those do get expensive. Insurance, $75 a month, and property taxes, paying about $50 on property taxes. Very low area right now. I believe property taxes for this is right in that $600 range, so very inexpensive. So I did end up getting a loan for $73,500. I ended up wrapping up loan fees into this loan of $3,656. So again, I ended up with a check of around $68,000 back to me. There's a total of $28,160 wrapped up into this specific property. And my mortgage right now is actually about $523. This is showing principal and interest at $423, but because I also include property taxes into that specific loan as well as insurance, the actual bill that I pay every month is about $520 within that range. Now, this is refinanced now. So because I do have a mortgage and I'm still putting away all these expenses here, my cash flow does drop. It dropped from $725 to now about $302.48. So with the refinance, I'm still putting away $474.42 For expenses, this covers vacancy, again, capital expenditures, garbage management, taxes, repairs, water and sewer, insurance and property, principal and interest there. So all of that is still being covered. I'm now covering my mortgage of $423.11. And the extra there of $302, that's just monthly cash flow. And that is what I take a cut from. So every month I pay myself a member distribution because I could let it sit in the account, but I'm not making any deals right now. I'm looking for properties to buy. In the meantime, I don't really want it sitting in my business account because my business account does not earn very much interest. I could pay myself $302 as, that covers everything else is already covered. My expenses, my mortgage, all of that is covered with the rent. I'm paying myself $302 as a member distribution. I take that $302 that I've paid myself, I move that into a high yield savings account over at Marcus or over at some other high yield savings account where that $300 can make me an additional, what's that? I don't know how much that is, 2.35% or 2.25% of $300 there. But if I do this every month, just paying myself $300, when I have a deal that I want, that I've made an offer that I've locked in at, I take me money, move it into my own personal checking account, and then I make a member contribution to my business, record it as a member contribution, and now my business has that equity. It's made interest. Yes, I have to pay taxes on the interest, but now I didn't just leave it sitting in a business checking account sitting stagnant. I moved it into my personal account, making a member distribution, had some interest made off of it because it's my money that the business paid me for my cut, moved it back in as a member contribution, and it's all sort of going forward from there. So that is basically all I wanted to kind of cover there in this video. So the return on investment, so the cash on cash return on investment for this specific property, even with $28,000 left in this property, I'm cash flowing $302.48 every month of monthly cash flow with my expenses covered in this property. That gives me a cash on cash return on investment of 12.89%. So I would say anything over 10% is a win here. When you're doing investing in the stock market, you can get a 7 to 10% on average. Here, I'm cash flowing 12.89%. Plus, I'm having principal pay down from having a tenant in place. I also have cash, I have, what else is going on? Deductions. I'm able to deduct the property, the expenses per year, able to take a deduction from the home's worth and such. So that is basically all I wanted to cover in today's video, going over my first real estate investment property. Do I feel I made a good choice here in this property? Right now it's looking very good. It's rented out, has a tenant, a married couple in place. It's, doing what it needs to do. And I'm currently looking for my third deal, and I'm going to be refinancing my duplex here. Mortgage rates have been coming down. So I am looking for somebody who can actually loan my business, my LLC, a loan versus having to take a loan out in my own name and then having to title the note back over into my LLC, because that creates a lot of paperwork. It also costs money there to do all of that. So that is it. Thank you all for tuning in. If there's any other sort of questions, drop them in the comment section below. I read and reply to all your guys' comments. And if you are brand new to the channel, enjoyed this real estate investment video, let me know, hit that thumbs up, and subscribe to the channel. And I will see you guys next time. Have a great day. Bye.